Hello everyone, welcome to Xylostar Financial Weekly Market Update. With me I have Amir and Samir.
Another week, another pretty interesting technical outlook on it, and let's just dive right into it.
Last week we got disappointing numbers from the UK economy by the GDP, and by the way, we heard some news regarding the Powell resignation from the CEO of Freddie Mac.
All right, everyone, Samir Raslan is here. I'm a senior analyst at the Institute, and here we are to take a look at our technical outlook on the market by the upcoming week. Make sure to follow Xylostar Education if you haven't already, and let's kick right into it with gold. All right, guys, as you can see, gold has reached the resistance of approximately 3,350s, and from it we saw some rejection. Well, that is inevitable because the trend was bearish. However, we had a breakout of this upper trend line with the Marubozu here in the middle. So this indicates for us a very strong bullish momentum on gold, especially that we had this trend line making this ascending triangle on a higher time frame. So for the current time, it might be consolidating, retest that support again, but there's also a very good possibility for the price to continue thriving upwards. So keep an eye on that. And also, if you need more information about it, just see our last video, the ones I've spoken about gold more detailed for the long-term aspect. So this will be about gold, and here we are going to NASDAQ. All right, everyone, speaking about NASDAQ, you see this trend line? Don't mind it. There's been a little bit of a glitch. This is why it's not as accurate as it should be on the chart. However, if we look at what has been happening recently with NASDAQ, we can see some sort of bearish pattern forming. Right? This is for a start, and we were expecting a retracement for NASDAQ to the trend line and the support before a continuation to the upside. However, this did not happen. There's still decent optimism about NASDAQ in the market. So what we saw is some sort of bull flag forming on a lower time frame. And this bull flag, I wouldn't consider it to be too decent and powerful because of the liquidation that happened here, but that also can be taken positively to the bullish side. However, because of this bull flag here, technically, we had this impulsive movement to the upside of that Marubozu that also, as you guys can see on the chart, liquidated the highs. Well, it's not a big liquidation. We can also consider it as touching the ultimate resistance on NASDAQ. Whatever the case is, we had two Marubozus on both sides, the bullish one and the bearish one. And afterwards, NASDAQ is still consolidating. So it has been consolidating since it's reached its all-time high within the support and resistance. So we can see that this support here was not really tested, right? So we had a breakout and the market didn't test it. It made this bearish pattern. So the optimism in the market can push forward to an uncharted price and keep pushing NASDAQ to the upside. But since the market is already past the trend line and still consolidating, say this trend line, yeah. So we have a little bit of consolidation below the trend line. We don't really have a strong break to the downside or a confirmation that the market will continue, but we have some bearish clouds, hovering around the environment. So if these clouds are dark, probably the market would drain. Yeah, but we don't have the reason to compel it yet. Neither a reason to compel, speaking about fundamental reasons, to compel gold to skyrocket to the upside. So keep an eye on NASDAQ. I wouldn't recommend you to go long on NASDAQ right now because of the technical factors. And so you don't really want to buy something in premium price, right? And it's already at a premium price. So what I would recommend you, wait for a retracement or at least a break and retest, right? With a confirmation before we can enter. So this consolidation after the trend line indicates that the trend actually ended, but it does not mean it's reversing, right? So this is what consolidation is, right? Market is gathering liquidity. So we might also expect a liquidation before market continues. So a lot of possibilities can have a NASDAQ. If you have a position opened, okay, of course it's up to you, long-term, short-term, whatever you want to do with it. Follow risk management. But if you're considering to buy NASDAQ, don't do it now. So this will be about NASDAQ, and let's go to EURUSD. EURUSD has been very interesting for the past while for a flow to catch, right? Or a river to flow with, take whatever metaphor you would enjoy to hear. Anyways, so exactly as we anticipated, it was last week at the trend line or the upper trend line of this uptrend, and the market retraced to the trend line just the way we look at it, and it is also resting at support, making us some consolidation. So the higher probabilities is for the trend to continue, especially of the, let's say, the bearish outlook on the dollar for quite some time. So we can expect EURUSD to continue in a bullish momentum. So that's about EURUSD. Let's go to Nifty50. Now, about Nifty50, or before we go into Nifty50, mentioning the name 50, 50 cent has turned 50 actually a few days ago, the past week. So if you don't know what 50 cent is, you should Google that. You'll probably be too young to be a trader anyways. No offense to any life experiences, but still you need some decent, let's say, patience and mentality, and that doesn't really come in young ages most of the time, in most cases for people. Anyways, happy birthday 50. Going to Nifty50, we had a break below the trend line for this, let's say, narrowing wedge. And we can expect the market to continue falling for this support before it continues or let's say make an upward momentum. So it's bearish for a short time. Now, once it reaches to this support, we need to be cautious because this might actually push the market further down, technically speaking, to liquidate that support or perhaps reach into another support. So from there, we should be cautious about where we're expecting it to go. However, in a short period of time, we're looking at it to be bearish. So that's about Nifty50. Let's go to Bitcoin. All right, as you guys can see about Bitcoin, as if we've spoken about it in the previous week, the possibilities of the price to retrace or skyrocket to the upside was mutual. So we had an interesting breakout in Bitcoin, very, very big, beautiful Marabuzo. After that, we had this bull flag, which also gave us an indication for a good entry. And of course, we would expect the length of the bull flag. However, the market has even skyrocketed further. The price now is almost at all-time high. And if you ask me, technically markets should retrace, but that's not always the scenario in Bitcoin. It's always that delicious asset for people to just keep eating, buying, right? Metaphor. So we have a little bit of bearish, let's say, signals in here, right? As in the wicks, the candle pattern, but also there is a bullish signal here still from this support area. However, the probability is for the market to retrace to the trend line, fill either of these two fair value gap. So if we wanna look at Bitcoin, we could see it retrace into the trend line either like that or something like that. Now, I would actually consider the first retracement as a more probable retracement, and that is due to these two Marabuzos here. So we can see people are pretty interested in just buying Bitcoin, bulk buying that thing. And yeah, if you want to go for long entries, don't do it now. If you want to go for short entries, then that is more probable. Make sure to follow risk management and good luck on your trade. That will be it for this week.
Greeting everyone, hope you are doing great. Once again, we are here to talk about finance, fundamental and financial markets. This is Masoud Amidian, Senior Fundamental Analyst at Xylus, the head office located in Dubai. And we are gonna dive into the economic indicators for the last week. We got the variety of economic indicators. Here, we are gonna dive into it. For the beginning of the week, we got the latest update from the Reserve Bank of Australia. They surprised the financial markets by keeping the rate as same as the previous meeting. They held it at 3.85%, and later we got a very, very disappointing numbers from the United Kingdom by the GDP. It released lower than expectations of the financial markets participants, and we got the higher than expected employment numbers from the Canadian dollar, and it made the Canadian dollar stronger at the end of the week. So I want to kick it with the FOMC minutes. Some members favored a rate cut soon, but most preferred to await clearance. Economic data, inflation risk, and global uncertainties remained key concerns influencing the decision of the members. It was just a brief summary about the minutes. The next chapter is about the Reserve Bank of Australia, which surprised markets by holding interest rates at 3.85%. 0.5% during its July 8 meeting, defying expectations of a rate cut. The decision came from a split vote 6-3, showing the board's caution ahead of key inflation data later this month. Markets reacted sharply, with the Australian dollar jumping and rate cut expectations shifting to the August meeting. The next chapter is about the UK GDP. United Kingdom GDP shrank by 0.1% in May, following a decline of 0.3% in April, basically a contraction, making 2 straight months of economic decline. The fall was led by weaker production and construction, despite a slight rise in services. This weak data increases pressure on the Bank of England to cut the rates as early as August. Canada's economy added 83,100 jobs in June, lowering the unemployment rate to 6.9%. Austin Goolsbee, the president of the Federal Reserve Bank of Chicago, in his latest interview with Freddie Mac last week, highlighted his concerns about the new threats of Donald Trump for imposing higher tariffs on other countries can lead to higher inflation, and increased my main concern about the rate cut in upcoming meetings for the Federal Reserve. From the political side, rumors circulated yesterday the Fed Chair Powell was considering resigning over criticism of a $2.5 billion Fed HQ renovation. Powell denied the claims, stating he intends to serve his full term through 2026. I want to sum up our amazing market update session from the fundamental aspect by reviewing the upcoming week economic indicators. Next week, the main focus and concentration will be on CPI and PPI from the United States, which is one of the best inflation gauge, and it will allow the Fed to track inflation in that region. By the way, eventually at the end of the week, we are gonna get the retail sales number again from the United States, which is one of the best indicators to show the strength of consumers in that country. And don't forget, next week we will get also the CPI from the Canadian dollar. Stay tuned, see you next week.
Thank you and see you next week.
And don't forget to like, share and comment.